Hi, good morning all. Yesterday was a very good day for the Indian markets. Indian markets in the last couple of weeks has been decoupled from the global markets. The S&P 500 has been continually making new highs, except for yesterday, whereas Indian markets have time from a level of 6,000 to 5,500 in a month or so. Even there is not so much pain in the European markets, and the Japanese market has been rallying on the QE announcement of the Japanese central bank. Their commitment to do whatever it takes to end deflation in the country, and they'll be also buying an equivalent amount, $80 billion a month worth of government bonds, uh, for roughly the same amount as the U.S. Federal Reserve is currently doing. So after the budget and even previous the budget, there was a lot of hope regarding economic policy reforms and just eliminating the problems which are there in investment infrastructure and clearing projects and all to attract and encourage investor sentiment and also attract a lot of foreign inflows. Uh, there was so much talk initially, but then that hasn't really been executed or that hasn't been really displayed to the investor in terms of some action. So that's what we attribute as the main reason for fall in the Indian markets. Yesterday was not one such day. The March WPI number came at up deep at 5.96, which is a low in 3 years. The market expectation was about 6.2%. However, the Jan WPI was sharply revised upwards to the tune of 0.8%. So that clearly is a sign that there are also upside risks to inflation at this point in time. So we expect the RBI to be really cautious, but at the same time we expect the RBI to deliver a 25 bips repo rate cut in its policy meeting in May, and that was also the general market optimism, which is why the Indian markets ended green yesterday. Talking about the global overseas markets, in the last week or so, the main focus of the markets, the main news has been revolving around precious metals. Gold and silver in the last week itself have depreciated by almost 15 to 25%. Gold is again down today, trading at $1385 per ounce. In Indian rupees terms, for 10 grams, it's easily below 26,000 today. So that clearly is a sign of waning perception of gold as probably safe haven, and some investors which also predict that there would be no growth in the US and the world economy, and they also fear the risk of deflation. And also, one big news was Cyprus plans to sell about 40 tons of gold in the market to gather money to comply with the bailout terms. So investors are clearly weighing their measures whether the next troubled peripheral countries like Spain, Italy probably can go the same route. And the fact that those countries have about more than 100 times more gold than what Cyprus has. If those countries enter the market and liquidate their gold holdings to raise funds, that clearly would be a shocker for the precious metals market, and it will be hard to imagine what could then arrest the decline in gold prices. Today, one important company of the index, Reliance Industries, will come out with their Q4 FY13 results. We expect Reliance to report a net profit increase of about 30% year on year with solid gross refining margins. And we also have the result of TCS, which is tomorrow. So now we are in the earnings season, so market would likely focus on some heavyweight companies and some important sectors to judge that how the economy is doing, but at the same time how the companies, whether the companies are reporting bad or good numbers. So that will be the sense of the market today. We expect the market to open week to slightly flat, with a slightly flat bias. Thanks very much.